Davide, will we see consolidation in European banking? Can a virus be an excuse to consolidate?
I think, listen, in Europe today there's about 3 million banking employees. Because banking is probably one of the most affected industries from digitalization, as actually they're not moving anything physical, I would expect today probably to have an excess of more than 1 million people working in the banking industry. So what has happened to media, what has happened to telecoms, what has happened to many sectors will happen to the banking industry. And because of labor laws in Europe, the only way you can actually facilitate this 1 million people out of the industry is through merger and acquisition. That's when local laws allow basically for redundancies. And so I do expect more in-market mergers, not cross-border, because there is not such a thing as a European banking market. The laws, the regulator, so far, it's country by country, and hence more in-market mergers, as we've seen recently with Intesa making an offer for UB in Italy.
If we see a bear market in banks, and I would suggest that the European and American banking experience right now is very, very different. Davide, what do the banks and what do the bank chief executive officers need from Christine Lagarde in an ECB?
Well, you see, I think, for example, yesterday I just met 2 bank CEOs. I think, firstly, I do think that what they need is, first, from the lawmakers, more than the ECB, they need actually a proper single banking market. So I always make an example. There is one thing in Europe that has been extremely successful in finance, and that's called the UCITS directive. It's basically the mutual fund industry. Today, the mutual funds industry in Europe is almost as large as the US one. All the products can be distributed and sold globally outside the United States, but you go from Brazil all the way to Tokyo. Basically has become the new industry standard outside America. Now, that one should happen across mortgages, credit cards, simple basic loans, so that the banks can have synergies. Secondly, I think from the ECB, what they need is zero rates. Not negative, not positive, just zero. Basically, help the industry making sure that they can operate, because they have fixed costs, and negative rates are actually a huge problem, because basically misallocate capital, and most importantly, impose basically losses on the banking industry. Third, I think actually I beg to disagree with the fact that we're not going to see inflation, because I've already spoken to many entrepreneurs across Europe, and the virus plus Hong Kong protest plus tariffs and deglobalization, what will lead, in my view, it's a re-onshoring in Europe of a lot of industry that has been put in China and in Southeast Asia. And the reason is because the breaking of the supply chains that we've experienced over the last 6, 9, 12 months are remaking entrepreneurs thinking, well, wouldn't it be better if I keep some of the plants closer to home? And I think net-net, the cost, the delays, the complexity right now outweighs the cheap labor cost in Asia. And hence, I actually do think over the next couple of years, we will see a re-onshoring of investment and short-term pick up on inflation, because all this blockage of supply chain equal higher prices.